Hey, how are you? Hope all of you are well. It's your CPA Manish here on Sunday, the 5th of September, 2021. Today, we are going to discuss why real estate or rental real estate is such an important part of so many taxpayers' investment portfolio. What is it? What are the reasons that makes investing in real estate so much attractive? Why do so many people want to put at least some part of their investments or some part of their savings into real estate or rental real estate? Look, the scenario is changing and we don't know what is going to happen in future. But historically, investing in real estate has been having a lot of advantages. It has been financially a good investment. Numerically, it makes sense. It has a lot of advantages from tax point of view for tax deferral or for avoiding tax completely. It is advantageous from point of view of asset protection. It is advantageous because it gives you a lot of gifting opportunities. It is advantageous from estate planning point of view. So there are a lot of dimensions where real estate offers you a lot of benefits. And that is what we are going to analyze in today's video. Look, the Biden administration has proposed quite a few changes in tax laws. And if those changes take effect, that will take away a lot of benefits away from investing in real estate. But today we are not going to discuss those changes or those proposals. We will discuss those changes or those proposals in future videos. But in today's video, we are going to focus on historically why this has been such a favorite tool that people would like to have in their investment portfolio. Okay. There are quite a few advantages. In today's video, we'll be able to cover, I guess, only 3 benefits. And that's what we'll cover today. The other benefits we'll cover in videos going forward. Before I get into the advantages, a legal disclaimer that this is only for your entertainment or knowledge purpose. This should not be construed as any kind of legal, tax, or investment advice. Okay. With that, let's jump into the first advantage of investing into real estate. So the first benefit is that real estate could create a tax-free cash flow for you. An investment in real estate, rental real estate, could create a tax-free cash flow year after year for us. Okay. Let's see how that happens. So let's take an example. Let's say we buy a property for $1 million and the rent on this $1 million property that we would receive is, say, $60,000 a year. Okay, so we would get $60,000 rental income from $1 million property. Very average example. This is 6% cap rate. 6% returns on our investment. Okay. Let us also assume very standard that we put in 25% of our own money. 25% is our own money. And we take 75% of loan. So we take a loan of $750,000. And this is a loan at 3.5% interest for 25 years. Okay, very standard example, $1 million property, 60,000 rent per year. We did 25% down, 250, and we took 75% of loan, which is 750,000 at 3.5% for 25 years. Okay. When you take a loan of 750 at 3.5% for 25 years, your monthly installment comes to $3,750. $3,750, which is annually $45,000. Okay, 45,000, very affordable, right? Because remember, our rental income that we are generating on this property is 60,000, and the mortgage that we have to pay is only 45,000. So when we get 60, we have to pay 45. So we are going to be left with $15,000 cash. So we generated a cash flow of $15,000 per year. Okay, we get rent of 60, we pay mortgage of 45, we have $15,000 cash left for us every year. Okay, this is the cash flow situation. Okay, now what happens on the tax side? How does the taxes work? What do we have to report on the tax returns? Okay, so on tax returns, our income is the same $60,000, but you cannot claim the whole $45,000 as your expense. Remember, $45,000 is your mortgage payment, is your mortgage installment. That includes two parts. That includes principal portion and it includes interest portion. Okay, and you cannot get to deduct the principal portion, the payment that you make for the principal portion of the loan. You cannot deduct that. The deduction that you can take is only for the interest portion of your payment. So if your interest calculation, if you do the amortization schedule on this loan and say your interest part of the loan payment is $25,000, then out of the $45,000 that you're paying, you can take deduction only for the interest portion of $25,000. Okay, so on the tax side, yes, your income is 60,000, but you cannot take deduction for the whole 45 that you are paying. You cannot deduct the principal payment. You can only deduct the interest payment, which is $25,000. But then you also get to deduct something else. You get to deduct something called as a depreciation. You get to deduct depreciation, and depreciation is calculated for number of years. It could be calculated anywhere for between 27.5 years to 39 years. Okay, but the good part of depreciation is, even though your investment actually is 250,000 in this property, your depreciation is not calculated only on the $250,000. You get to take depreciation on the whole $1 million worth of property. Okay, so when it comes to depreciation calculation, it's not only the 250 that you depreciate, you get to take depreciation on the whole $1 million. And say this $1 million property we can depreciate in 27.5 years, then $1 million divided by 27.5 years, you get to take a depreciation of $35,000. Okay, so how much was your interest deduction? 25. How much depreciation you get to deduct? 35. So total deduction, total expense that you get to deduct is $60,000. Now remember, how much was our rental income? 60. How much we are able to deduct now because of depreciation and interest? 60. You have income of 60 reportable on taxes. You have expenses of 60 reportable on taxes. So your taxable income is how much? Your taxable income is 0, where you generated actually how much cash flow? You generated a cash flow of $15,000. So this is what I meant when I said that you can generate a tax-free cash flow because of depreciation, because even though you generated a cash flow of 15,000, you paid taxes on a $0. So you get cash of 15, you pay tax on 0. This is the tax-free cash flow that you generate year after year. This is the biggest advantage of owning a real estate, you know. Look, I understand the variables would change depending upon whether it is a residential property or a commercial property. The number of years in which you depreciate it could be different. Okay. Your loan to value ratio could be different. In our example, we have taken 75% loan. In actual example, it could be more, it could be less. Okay. The rate of interest on loan could change. It could be more or less than the 3.5% that we have assumed. The return on rent, which is in our example 6%, could be more, could be less. It could be different. The years of mortgage, we have assumed to be 25 years. It could be more or it could be less, right? And whether it's a triple net lease where all the expenses are taken care of by the tenant, or maybe all the expenses are taken care of by your practice, because your practice might be the tenant in your own building, right? So all these variables could be different. It could change. And depending upon these variables, the actual scenario could be a little bit different than what I explained. What I explained was a simplified example. But the gist of this example is that a rental real estate, the biggest advantage is it is capable in correct circumstances, in correct variables in place. Most of the rental real estate investment tend to generate a tax-free cash flow. Most of the investments tend to generate a tax-free cash flow. That's the biggest advantage. Okay. Now let's take a look at the second benefit of owning rental real estate. And this is my favorite. The second advantage, second benefit is my most favorite. It's very interesting. Most of the times when I explain this to any of my clients, I've seen them getting amazed. I have seen an aha moment when I explain to them. It's not a secret. It's not like a well-kept secret, but not many people are aware of it, or not many people think about this in the way we are going to discuss right now. So let's see the second point, why rental real estate is so attractive. See, if you have mortgage on your property, it is going to increase your rate of return drastically. If you have mortgage on your rental real estate, it is going to increase your rate of return drastically. Let me explain what I mean. So going back to our example, we bought this property for $1 million and we have a rental income of $60,000, that is 6%. We put in 25% down, which is $250, and we took a loan of 75%, which is $750 at 3.5% rate of interest, right? The same example, we take it forward, okay? Now, on this loan of 750 at 3.5, we discussed that we are paying interest of $25,000, okay? So this 750 of loan is costing you $25,000. That's it. The loan of 750 that we took is costing us $25,000. That's the cost. Okay. So when we have rental income of 60, we are paying somebody, an outsider, $25,000 to use their $750,000. When we make 60,000, we have to pay somebody 25,000 to use their 750,000. That's it. So out of 60, if I'm paying somebody, an outsider, 25, I get to keep for my own self the remaining $35,000. You see what's happening here? I get to keep $35,000 for my $250,000. So I keep 35 for the 250 which I invested. If I get to keep 35 on the 250, you know what the rate of return is? If I get 35 on 250, the rate of return is 14%. It is not 6%. You see what happened here? All of a sudden, my 6% return went up to like 14%. It's no magic, okay? It's no magic. It's very logical. Look, when we were going to get 6%, we were giving the bank only 3.5%. When we were going to get 6% in rent, we are going to give them only 3.5%. So we were going to keep the 2.5% in between. So our returns were going to be higher. You see what happened? When we were going to get 6%, we were giving them only 3.5. So we kept the remaining 2.5% for ourselves. Okay. And then when my investment was 250, I took loan of 750. So there it was a ratio of 1:3. I put in $1, but I took $3 from them. I put in 250, they put in 750. So it is a ratio of 1:3. When I put in $1, I used $3 from them. So this benefit of 2.5%, I used it like 3 times. So 2.5 I kept from them for 3 times of it. So 2.5 times 3, 7.5. I have to add in my own 6% returns. So 6% plus 7.5, that is how the 14% is calculated. Interesting, right? See, if I had put in 200 and I would have made them put 800, then 200 and 800, it was 1:4. Then I would have gotten benefit of 4 times of that delta of 2.5%. So 4 times 2.5 is 10%. I would have added 10% in my returns of 6%, which is 16% returns. You know, so when you have mortgage and your mortgage percentage is less than your rate of return, then there is a delta which you get to keep. And that delta multiplied by the ratio of money you put in versus what the bank puts in, that ratio multiplied by the delta, so much gets added in your returns, and your returns are bumped up drastically. Haha, right? Look, if this was a little bit overwhelming, rewind the video and watch this section again, and it will definitely come to you. Okay, so this is the second advantage. Okay, and let's go over the third advantage for today. This is for today's video. We'll keep this third one as the last one. Okay, and the third advantage or benefit of investing into rental real estate is the appreciation adds on to your returns. The appreciation on the property value will add on to your returns. Okay, let us go back to our example again. We had this property that we bought for $1 million. And let us assume that this property appreciates every year at 3.8% per annum. This is, if you Google this, I found this on the website search, that the average rate of appreciation on real estate in US for last 25 years is 3.8%. So that's why I'm using this. And if your property appreciates at 3.8%, which seems to be very modest, for next 10 years, then the value of your property after 10 years would be $1.4 million. $1.4 million. So in 10 years, the property would have appreciated $400,000, you know? So this is a benefit. This is a benefit because even though you invested only $250, you get to take appreciation on the whole $1 million. Even though we invested only $250 of our money, we get to take appreciation on the whole $1 million. This is, again, such an advantage. So today we discussed about the three things. First of all, we generated 15,000 in our example. We generated a $15,000 cash flow, but the taxes were zero. Remember that? Okay. Then we realized that the 6% return was not 6% return because there was a delta between our returns and what we paid to bank times the ratio of money that we used from them. So our returns could be 14%. If the ratio was even higher, it could be like 16%. Okay. And then the third benefit is that the appreciation that we got on the whole $1 million investment, even though we had invested only $250,000, right? So these are the benefits we discussed today. And remember, all this we are getting every year $15,000 and every year 14 to 16% returns and appreciation and everything. We are getting all this without us having to pay any taxes year after year. No taxes year after year, you know. So this is how it continues, but somewhere all these taxes that we are not paying today and year after year, somewhere this is going to all get together, and then there will be an event, a painful event where everything will come together and we might have to end up paying all back taxes or cover all the taxes somewhere, right? No, no. There are tax laws in place as of today, unless the Biden administration changes these tax laws. Not only that we get to not pay any taxes year after year on all this income gains and appreciation, but there are ways to legitimately not pay any taxes whatsoever, okay? And those are the tax laws or advantages or benefits that we are going to discuss in our next video. So much as today it was interesting by crunching the numbers and the financial advantages, I'm very confident that the next video will be as interesting to learn what are the tools we have, not only to defer taxes, but to avoid paying any taxes whatsoever at all ever in our lifetime. Okay. So looking forward to discussing those with you in the next video. Till then, take care and I'll see you soon. Bye-bye.